Hello and welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this video, we'll discuss the importance of portfolio balance as many asset classes continue to rally. In particular, there have been many news headlines focused on Bitcoin, copper, gold, and silver. In this context, it's important to maintain perspective on the role of each of these asset classes and how they fit into a portfolio. After all, the most successful investment approach isn't about chasing the latest asset class everyone's talking about or trying to predict the market. Instead, it's about building a portfolio and a financial plan that aligns with your personal financial goals. First, digital currencies are capturing headlines as lawmakers on Capitol Hill examine several key pieces of legislation this week, which you may have seen referred to as Crypto Week. The House of Representatives is reviewing measures that would establish regulatory frameworks for digital assets. The anticipation of more widespread acceptance and adoption of cryptocurrencies has sent Bitcoin to a new all-time high, topping 123,000 today. But it's important to note, as this chart shows, that Bitcoin is also highly volatile and highly correlated with the stock market. Over the period of time shown, Bitcoin and S&P 500 have actually generated similar returns, but Bitcoin has experienced much larger swings. It's also important to note that other cryptocurrencies have not experienced similar gains to Bitcoin. So when considering these assets, it's important to make sure they fit with your portfolio and goals, rather than reacting to the latest news headlines. Next, let's talk about copper, another asset that's experienced a recent rally. President Trump's announcement of a new 50% tariff on copper imports drove the metal to new record prices, since the United States relies on imports for nearly half of its copper supply. Copper is an important metal used across the economy. It's very economically sensitive and sometimes even used as an indicator of how the economy is doing. For investors watching these developments, the key question isn't whether to chase the latest price swing, but rather how industrial metals and commodities can fit into a well-balanced portfolio. Whether it makes sense depends on your particular circumstances, not how it's performed over the last few weeks. Finally, precious metals like gold and silver have long been viewed as potential portfolio diversifiers, offering unique characteristics that differ from traditional stocks and bonds. However, it's important to understand both the opportunities and the limitations. While precious metals have shown resilience during certain market downturns, they don't generate income like dividend-paying stocks or interest-bearing bonds. Additionally, their performance can be unpredictable, even when market conditions seem favorable. For long-term investors, the key consideration isn't whether any single asset class is performing well at the moment. Instead, it's about how each component fits within your broader financial strategy. Precious metals, like any other alternative assets, work best when they complement rather than replace a well-diversified foundation of core holdings. We hope you found these insights helpful. If you would like to discuss any of these assets or your general portfolio strategy in more detail, please don't hesitate to reach out. We look forward to speaking with you.